Welcome back. Walmart kicking off its annual investment community meeting in Florida. Executives from the company's CEO, Doug McMillon, to individual business unit CEOs within the company. They're going to gather to discuss Walmart's strategic plans for the year. And investors are locked in for announcements on any growth initiatives, cost savings plans, and that's especially as the event has a history of moving Walmart stock. And joining us now to discuss what we can expect from the retail giant is D.A. Davidson Company MD, Senior Research Analyst Michael Baker. Michael, thank you for being with us today. Just some thoughts. In general, what should we expect for Walmart to say about the current quarter, and then all eyes focused on guidance, of course?
Yeah, well, and you're right. Not only does this tend to move Walmart stock, we think it tends to move the market in general, just being a consumer bellwether. You know, the quarter, we're seeing sort of mixed trends. Of course, we know the consumer's under a little bit of pressure for the quarter, but some of the data points we've seen that correlate well to Walmart's same-store sales have actually been pretty strong. So we know they're taking share. We wouldn't be surprised if it's a cautiously optimistic tone about the quarter. We don't really expect any big change in guidance for the quarter or the year, but think they're having a pretty good quarter. They came into the quarter with a little bit of momentum, and again, some of the data points have been pretty strong. We think that, you know, some of the key things we'll hear about, of course, all the analysts, including myself, will ask them about the state of the consumer, all the normal questions. Are you seeing an impact from lower tax refunds, from SNAP, inflation, et cetera? So there'll be a lot of focus on the consumer in general. And then we think there'll be a lot of, Walmart will bring it back to their own initiatives and their own growth plans for the year.
Michael, what could Walmart say about categorical purchasing right now that would really kind of rattle the rest of the retail industry, or at least put the rest of the retail trader out there, or traders investing in the retail sector, on notice for what they should expect from the other major players?
Well, we think Walmart is taking market share in non-discretionary categories. They're well positioned there. That's where they've historically been strong. We think that's where the mix is going this year. And so we would suspect that it'll be a little bit weaker in some of the more discretionary areas, consumer electronics, as an example, home, even apparel. Really, I don't think that's going to surprise anybody. I think that's what we're hearing, not necessarily across the board. There are some exceptions, but generally speaking, that's the expectation, and we think that's what Walmart will say. And that is good news for Walmart. They do well in environments where consumers are focused on everyday basic needs rather than more of the discretionary sales.
So how do you think that shows up in their margins? We were just talking to BlackRock's Wei Li earlier, and she was talking about the effect that labor costs and also goods costs, services costs are having across the board, not just retail and retail giants like Walmart. But how do you see this hitting Walmart in particular?
Well, so mix will be a margin pressure point this year, but there are offsets. Supply chain costs have come down quite a bit. We look at trucking spot rates and contract rates, and they're down double digits year over year. They're down almost as much as they were up a year ago. That'll be a positive. Remember, starting at about now, the next couple months, we're starting to cycle this massive apparel markdown situation that we had for our retail, Walmart included. As you cycle that'll be a margin benefit. Labor costs are still a pressure point, but perhaps less so this year than they were last year. Walmart's already brought their wages up, and they're at a point where we don't think there's that much in the way of increases ahead. So a lot of margin offsets to the pressure point because of the mix. So all in all, we think margins will be more flattish this year rather than down significantly last year. Also, one thing that Walmart will stress is a lot of their what they call their alternative businesses, a lot of their newer businesses, things like Walmart Connect, Walmart Illuminate, Walmart Plus, et cetera. Those are all higher margin businesses. And so not as big of a sales driver, but very high margins, and that helps offset some of the mix issues as well.
Is there a big investment that a company like Walmart can make at a time like this in perhaps a down environment, or even sensing purchasing opportunities of kind of smaller entities, companies that would need an injection of capital, or that would ultimately bolster the Walmart kind of portfolio of products and make that ecosystem even more compelling to some of their core customers at the end of the day?
Well, that's something Walmart's done quite a bit of. I mean, over the years, they've bought and sold many companies, and they're not afraid to take a risk. We think that the CapEx actually was up a little bit last year. We think it'll be elevated this year versus where it was maybe the 2 or 3 years prior to the pandemic. And we think most of that incremental investment is coming more on supply chain type things. that they really are investing in supply chain, and we think that's a smart thing to do. So we think that's where most of the incremental investments will be.
And final question here, we got time. I want to ask you about Walmart Plus and their competitive drive with Amazon and Amazon Prime, and then how that factors into their demographic push into wealthier, I would say, wealthier purchasers, wealthier consumers.
Yeah, I mean, I think they're a good competitor with Amazon. Really, Walmart's core demographic, if you will, is everybody. Well, everyone shops at Walmart. We're seeing a little bit of a push into a higher end demographic, but we think a lot of that is trade down. That's customer driven. Customers, even higher end customers, are looking for better deals, and they're finding that at Walmart. Walmart Plus is part of that. We think one area which is somewhat related, I suppose, where they've been a lot more competitive is Walmart Marketplace. Their 3P offering online, similar to what Amazon has done. It's taken Walmart a long time to get there, but we think they're much more competitive right now. They have something in the order of 400 million SKUs now online, including their marketplace. That's up from about 80 million a year and a half ago. So they've really increased there, and we think they're becoming much more competitive with Amazon on that online front.
I tell all my friends, really solid $16 golf shorts over at Walmart there. D.A. Davidson analyst Michael Baker. Michael, thanks so much for the time this morning.
Sure, happy to do it.